Oh,
you got a jumper on, Chris. It must be cold.
It's freezing.
Never mind that. Just be thankful Perry's got clothes on. After last night's revelation, again.
I haven't paid you £20, so that's why the clothes are back on.
I don't give a flying feck. I mean, oh, Jesus Christ, I'm scarred to life when Fossil did it. I mean, Jesus. I know it's a bit hedonistic, this sort of group at times, because we're not politically correct, but that was taking it a bit far, wasn't it?
Who, me or Fossil?
Call on the kettle black.
Well, the play. Well, yeah, shut up, you. Nobody's interested in what you say. You live in the far out of the earth. We sent you there for a reason. Go get a haircut.
I had to Google what Viagra was.
You are. Never mind. Never mind.
It's definitely a woke-free zone in this group, isn't it?
I can't be bothered with any of that. I really can't. That's why there's a disclaimer on the front. If you're easily offended, just fuck off.
Yeah.
I'll never get that woke culture. I never will. I'm the wrong generation for it. It's just, what happens? Nothing.
Well, my son's going to university. My oldest son's going to university this year, and he's had to go in for 5 days for like a taster week. And he said, "Dad," he said, "you've never seen so much woke shit in your entire life as he's seen this week."
Yeah, right.
It's not for me. I must admit, it's genuine for me. I mean, when I left industry, let's see, I'm 54, so it'll be 24 years ago when I left corporate world to start working for myself. It was coming in then. And one of the things that makes me laugh, they talk about all this progressiveness and everything, saying, oh, it's a new thing. It's not. It's always been there. I just think social media's pulled it out more so. Even if you watch things like Bless Thy House and all these 70s comedies, they were talking about the same things then. And that was God knows when back. So the only thing is now you kind of, well, saying that, you could lose your job for it when I was there. It's just another weapon for the Game of Thrones in corporate life. That's the way I look at it. That's why I left the corporate world. I was sick of the knife stabbing. It was horrendous. But never mind. We're all over 21 here, I imagine. Are we all over 21?
Yeah.
Vaguely? No.
Just only just.
Fossil a few times over.
It's
So we all know our own mind. So we're all fine. Okay. So I'm going to chat mindset and money today, but I can see there's a newer face popped in. So we all say hello to Joe. Hello, Joe.
Hello, guys.
Is that Metallica on your t-shirt? Right, you'll fit right in. Well done. Warm welcome to you. If you get offended, tough shit, but we'll try and make you as welcome as we can.
I've been watching your videos for a long time, so I know the score.
Fair play. Where do you live?
I'm in Perth, Western Australia.
Your accent isn't that.
There you go.
I'm from Salford.
I was going to say, because I was trying to pick the accent out, but then you threw me with Perth. But the haircut, which is directly above you, will prick his ears up, thinking, yes, somebody's on my team.
I don't know how we let him in.
Well, we don't know how we let you in, that's for sure. Right. Let me...
I'm witness protection.
Yeah.
I'm going to...
you need it in Perth. Sorry.
Pull a sheet in. Some of you have seen this before, but if you haven't, it's really to sort of draw your eyes to understanding what you're doing with your account and how much stress and damage you can do to it. Now, if we say you've got £1,000, just as an arbitrary figure, that's your starting balance, and you looked at it, how much would you risk against that on a trade? If you were going into market and you go, right, my account's £1,000, and be honest, because I know there's some guys out there that I've spoke to, they would risk easily 600 or 700 quid of that because they'll oversize the thing.
I'd probably try to aim for 1%.
1%.
Yeah,
So the
same.
arbitrary is 1%. Okay. So any advances on that?
On £1,000,
10% for me.
probably do 100 quid in fairness, Scruff.
Okay.
Yeah, I'd probably look at 100. Yeah, as a
Right.
max.
So where does that come from?
Well,
Where
I
do
mean,
you
that's
believe-
10% of the. I
What
know
I'm
you should
trying
do
to
what.
get, so 10%. Okay. So
Well, that
you've
would be
got-
10%, but like you say, it's a small account. So, you know, I think in my eyes, the rules are slightly different for a £1,000 account than they would be for, say, a £10,000 account.
Wait, it is. The higher the account goes up, the less the percentage comes down, but the monetary value goes up. And it's just basic maths, that. But what I'm trying to get you to think about is where this £100 comes from, where this 1%. Now, this particular spreadsheet is to give you what's called a risk profile. I work to a risk profile of 10% per week. I don't do it per trade because I think that's suicide. I do it on allowances. So if I was trading this, you were correct in the dynamics changing. It'll be between 10 and 20% per week. Okay, but we'll work it on an allowance of 10%. So what that's telling me, for the week, I have £100, not per trade. And this is one of the pitfalls some guys fall into. They think, well, it's £100. Well, that's only 10 trades. If you get that wrong, where do you think your psychology is going to go? If you lose £100 of that in one day, you're going to, your mind's going to be frightened. Then you're going to be worried. But the worst emotion is the anger. If you lost 100 quid in one day, you will attack the market because you're angry with it. So suddenly this 100 doesn't become 10% anymore. It can probably be 10% a day, and you'll be losing 500 quid in a week. All right. So you've got to balance this out. So if you kind of think, right, I've got some pocket money this week and it's £100. That's all I've got to play with. This is my investment into the markets this week. How can I feasibly go into this safely? Well, how many days do you like to trade? Is the next question that I would ask. You want to trade every day, Monday through Friday, so that's 5 trading days. Do you want to trade 3 days? So don't trade Monday, don't trade Friday, Tuesday, Wednesday, Thursday, whatever. I mean, how many days do you guys trade?
Probably
all week, generally.
Tell the truth.
Four and a bit.
Yeah. Like, well, that'll be 5 then.
Yeah, 5.
I look every day.
Right.
Yeah,
So we
me
say it's 5 days. So what it's telling you is each day, your £100 is now broken down to 20 quid. All right.
Okay.
Then you have the bid size to go against it. Now, the maximum size I work to is £1 per 1,000, and it's liquid 1,000. So it's either 1,000 of money, or if you're in the prop industry, because that's slightly different, it's 1,000 of drawdown. Because in the prop industry, you can say, oh, I've got a 10,000 account. Well, you might have a 10,000 account. You might even have a £100,000 account. But the drawdown is what the account truly is. And it might only be 1,000 quid. Because you lose the drawdown, the account's gone. So the rest of it is buying power.
And you'd use the 10% for the week off the drawdown for the prop.
Correct. So that would say be £1,000 worth of drawdown, and it's 10% of that. And then that way it keeps you in the game, it keeps you controlled. And then if you work on just a basic math figure of £1 for every liquid 1,000, it means you're never stressing the account. So you don't have to do any of this mathematical gymnastics that some people do. It's just, right, I've got £1,000. The most I can go to is a quid. Now, if I'm putting madness into this, and I'm breaking that by 5, that means each position by definition is 20 pence. So you're lowering your expectations all the time, but not only are you lowering the expectation, you're lowering what your mindset is. In other words, you're dialing your emotions right down. Because when I watch some of you guys trade, you get really panicky. and you're excited and you're really, yes, I want this. Eh. That's because your emotional level is about 8, you know, on a scale of 1 to 10. Mine's 2. I'm counting. I'd like to get it to
watching me
0.
trade.
But then I talk to you a lot, and it sort of lifts up my emotional value a little bit, and off we go. But that's setting out a stall for the week. Now, if I take this down into what we do, and we know it's going to be 5 days. So each day is going to be 20 quid, right? So I put my allowances in. So writing it down in front of you, it already starts shaping your trade before you go to market, because you know it's 20 quid, right? Well, how many trades do you take in a day? Be honest.
2.
Right? 2. I take 2. Do 1 in the morning, 1 in the afternoon, and if I'm paid on the morning, I don't bother on the afternoon. So we're going to go with 2. So you're planning on 2 trades each day, which now tells you you're going to invest £10 in each trade each day. So it's controlling everything you do all the way down. What position size are you going in on? So we'll pick on Sparks because he won. Would you max that out or would you break it?
I'll break it into 2, I think.
You break it into 2.
Potentially
so
for
your
2
trading
trades.
size by definition now would be 50p. So you would go 50p. So what it's telling you now, on each one of these days, each position is 50p. Your stop is 20.
I'd be doing, because I always do 5 madness, so I'll be doing 0.1.
So you'll be down, well, on that, you'd be down to low figures. But what it's telling you is, it's now telling you what the stop is. So you now know if you're looking at a trade, if you're at 50p or 0.1, whatever, well, the stop's 20 maximum. So your stop needs to be below that. And then it's keeping your maths over and over. And then you break it down a little bit further, and then you just start filling in what you do. Right, I took
So
one
by
trade.
definition, if you were taking a trade and it was kind of, you needed a 40 pip stop loss, you'd just down it to 25 pence.
Correct.
Rather than 50, yeah.
Correct. Yeah. And that's the whole idea of what this is all about. And it's shaping your mind into sort of thinking systematically about, well, how much have I got? How much can I use? And what is my expectation? And putting it on a sheet like this kind of pulls it all in, you know, and you don't have to do it. I made it just to sort of illustrate a way of thinking. And the idea is you can now see it in black and white, because you might, as you rightly said, say, well, that trade's like that, that's 50 pips. Right. How do I get it to 50 pips? I can't really trade at 50p. You know, I've got to drop that down to 25, which is still not enough. So I've actually got to go down to, oh shit. I've actually got to go down to maybe 10 pence. And it helps you start building up a picture. Does that kind of make sense where I'm going? I made it just so that I could kind of illustrate it.
Mm-hmm.
Yeah. That's good. Yeah.
And I'll kind of explain where profile comes from. I don't know how many of you work in industry or do budgeting, but there's a term called ring fencing. Does anybody come across ring fencing in finance? What it means is each day, for those of you who don't know, you're ring fencing X amount of money and you can't go a penny above it. But what it also does is it means that ring fence stays within its own criteria as well. So you're ring fencing the entire week, in this scenario, £100. So that's all you've got to play with. Then each day is also ring fenced. So if you're breaking that by 5, it's 20 quid a day. So you have £20 to use on Monday. And if you don't use it, that money does not go to Tuesday. it's ring fenced, it stays within Monday. So when you come to market on Tuesday, you've still only got 20 quid because that's the ring fence allowance for that day. And what you'll do is you'll start saving your account, because you can have a good Monday and a terrible Tuesday. But because you're only using a ring fenced amount of money, any profit you made on Monday, you can't use it to buffer Tuesday. Does that make sense?
Mm-hmm.
Because what will happen is you like have a good Monday, bad Tuesday, bad Wednesday, good Thursday. They'll balance each other out. But one of the biggest things that I've seen in the past, and I'm guilty of it myself, is you make a lot of money. And then you go to market and you think you're He-Man. You know, I've got this absolutely sussed. I made 200 quid yesterday. So you up your position size on the Tuesday because you think you've got this extra money to increase your balance. But that increase has now thrown your mindset out because you're now trading out of your comfort zone, and you haven't gradually increased your position size. You've radically increased it. And Tuesday becomes an absolute nightmare. And everything you made on Monday is gone. All right, 200 lots, 1 minute chart, off you go.
No arguments
would
for
you-
me.
Would you reappraise that at the end of the week? Let's say you had a good week and you've upped your account by, 2% or something like that. Would you, at the end of the week, then reappraise that and lift up the...
Well, all you do is that the next month,
As your
it's
account
what
size.
you're comfortable with. So say you start with 1,000 and you put your, let's just say you put 200 quid into it, just for argument's sake. So the next week, you're not starting with 1,000, you start with 1,200, but you're still using the same percentages, 10%.
Mm-hmm.
So instead of 100, it's now 120, which will naturally increase your position size slowly. It's when you're watching me build the gold account up, that's exactly what it's doing. Each week it then starts again, but it can increase the position size a little bit. I started it down at whatever it was, 10 pence, 20 pence. It's now safely at 80p a unit. So for me to do my fiver, which is all I need to do because I do it across a month, I can do it in a heartbeat like that. I only need 3 or 4 pips, and then suddenly the target is met. Well, I don't need to be a hero no more. I just take the money, find, reset, do it again tomorrow. And it's all about controlling yourself. You only want to be in the market as long as you need to be. The longer you're in, the more you're at risk of losing your money. So what you want to do is think investment. Always think investment. I am investing X amount into the market, and I want my return as quick as possible. And as soon as you got a return, be thankful, go put the kettle on, take the dog for a walk, and enjoy your day. Because what you've just bought is freedom. Or do you want to be a slave to the machine for 12 hours a day? Because I don't. I'm done.
No, thanks.
I was finished before 8 o'clock this morning. I've been out to the polling station, which is fortunate because it's just across the road. That's the beauty of living in a small village. You haven't got to go far to get anywhere. So I've done my thing at 7 o'clock. We were first in. Came across. Yeah, it's ready. Quarter past. Buff. Press the button. In and out in about 6-7 minutes. Job's done. Finished. And now I can just do whatever I want. I was going to put my feet up, but yes, Joanne has heard that, and I have to go in the garage and cut all the wood up. I can't wait for this kitchen to be finished. But what do you guys think? How do you cope with your money? How do you cope with your mindset?
I think it comes down to financially what you want out of it, to be honest. If you're wanting 500 quid a day and you can do that in DAX within an hour this morning, then the maths tell you how much your account should be. And if it's telling you you've got to put £20 a pip on, it's £20 a pip. If you want to stay in the market all day, it's £5 or £3 a pip. It's just there's no comment. There's no way. Do you know what I mean?
You've got to
Mathematically,
build it down. If you were doing 500 quid a day and you're working on a basic mantra of £1 1,000, well, if you're on £1 a point, that's 500 points.
Exactly. Yeah.
That is a big, tall order. Now, on the DAX, 50 pips is probably doable. So, in theory, you need to be at about a full lot. Now, again, to run a full lot on the DAX, you also need an account big enough to take it. And I think this is a lot of where people, and it's YouTube's fault, because it's always, you put little money in to get big money out. It doesn't work like that. You have big money to get consistent money out. It's get rich slow, I think, is the best term for it. There's going to be a day the DAX will turn on you. And if your account can't take the damage, everything you've done's for nothing. So it's...
If I was to invest 20,000 of my own money,
2 lots,
I would expect, personally, this is just after 2 years of looking at this, minimum £500
a day.
Yeah.
Yeah, but it's doable because it's 2 lots.
But I wouldn't put £20 on it. You know, well, I could if you could if you wanted to. The account could handle it, but that just means I only need 25 pips.
Yes, but the way to do that is you've got to be very, very patient and take a golden shot.
Yeah.
What happens is and I see it all the time. How do I get in? It's not how you get in. The question is, how do you get out? Asking the wrong question.
If you've lighted up. Yeah, if you've lighted up in your lot source.
By pressing the button. Press the button anytime you want. If you've got a bias to the upside because you think the market's genuinely going to move up today, just press the button and go in. The hard part is getting out. And that's the hardest question. But it's the one question nobody asks, because they just want to know how to get in. Well, you get in on a heartbeat. It's why your entry criteria is not quite as important as you think it is. But your target is. Now, one of the theories behind madness in pound averaging, and these are not my theories. These are from years and years ago. They're just pulled into a smaller trading scenario, which is our day trade. The banking principles. Your pensions are, what, a 20-year horizon on average? Do you really think the entry point makes any difference to that? None. It's the exit point that's important, because you've got to get it out at the right time. And if you get it out at the wrong time, that fund can drop colossally. But the horizon from the entry point to your exit is where the money's made. So
it's the same when I buy, you know, obviously you know what I do. I buy investment properties, and I've done it for years. So I've bought 2 houses this week, but before I bought them, I already had my exit.
Yeah.
So same as the way I'm hoping to put the trade in. So I had my exit before I bought them. The worst case scenario exit, if that makes sense.
Yeah, and that's what I'm driving at, because you're either going to get out at a loss or you're going to get out at a profit, and you need to have these pretty much defined. Ideally, the profit can be open-ended, where it can go as far as you can, but you need like a minimum criteria of what you want to make that investment work for you, which is why you see my minimum pips. Well, I want to be at least 8-10 pips, because then that makes that trade worthwhile. My exit on the other side is something I have to put in place to negate any loss. Now, that loss means the investment was wrong in the first place. And if I let that run wild, what's going to happen to the account? It's going to kill it.
Wipe it out.
Yeah. So one trade should make you, but one trade should never break you. And that's why I say your entry is not quite as important as your exit. And you should always know, when you're looking at a chart, all right, this is the trading zone that I'm working in. Let's kind of the two red barriers. Your stop really wants to be on the other side of it, because once it breaks out of that zone, you could potentially be wrong. So you already know roughly where, as Lee was saying, your exit criteria is. It mightn't be to the pip, but you've got a fair idea that it's going to be in the zone underneath or above, depending on your direction. Well, you've already got your support and resistance level in, so that's one shield. You just want something else, whether it's the swing of the market, a moving average, the second golden eye underneath, just something, and then you can make a measurement, and you can go, well, I'm roughly going to get in here, and I'm roughly going to get out there, and it's 50 pips, right? Can I afford that? No. Right. Why can't I afford it? Because the position size I've got only says I can have 20 pips. Got to pound. So how do I get it to where that stop roughly is? You reduce your position size. Half it. So you half your position size, but your stop stays exactly where it is or thereabouts. Right. Am I back down to where that roughly is? Yes. Good. I'm now calm with the market. And I've profiled my account, so I'm not going to damage it so bad. And in theory, it'll take you 10 to 12 weeks to blow your account out if you follow a risk profile. Now, that gives you enough time to recover if you're wrong. And it's why when I work my wage out, I work my wage to roughly 48 weeks of the year, because I know I'm going to be wrong and I know I want some time off. So my expectation is always realistic. And that controls what I do. And it's why I'm calm. Silence. 200 lots. Let's all get excited. Dial it up to 11.
I think one of the things that probably happens to the industry is people come here and they don't do what's been discussed now. So they don't come in with the mindset, I'm after a pound, £10, £100 a day. And all they think is because of what YouTube social media paints, you know, something I've paid attention to is the amount of lots. When you see all these videos, the lots, like Secker, for example, when he's made £30,000 and you look at the lot size and so on like that. And I think if you don't treat this like a business, you might as well just throw your money into a fire, because you're going to lose it if you don't plan stuff. And that's from my experience, because I've made the mistakes, I've blown accounts, and I think for anyone that's new to the group, the sooner you create yourself a business plan or a plan of what you want per day in a year or 2 years or 5 years, the better it'll be for you. And as long as you stick to that 10, 15, 20 pips a day, if you can cement that for the next 12 months, 18 months, 24 months, the world's your oyster in terms of trading for me. If you can constantly get,
I mean, I was quizzed about 10 grand in 18 months, 2 years, saying it can't be done. Do you know how much you need to do? 20 quid a day. You do 20 quid a day consistently, which you can. It's not difficult. You've got £1,000, you'll do 20 quid a day easily. In 2 years' time, that'll be 10,000 quid. Now, that small account that we're building, I've already had 1,000 out of it before we started. And I took the thick end of 300 quid out of it last month. And I'll certainly be having 300-400 quid this month. I'm only a few months in and I'm already nearly halfway there. So why is that against somebody else? I plan mine, plan it out. And I sit and I work it out. And the next part of it is, I'm not greedy. I know what my limits are. And I don't stress them. But when you look at the world of YouTube, oh, no. There's a wonderful £32,000 worth of profit. Well, I can do that with a 14 million quid account. I really can. I'll do it in a fucking heartbeat. But look at the lot size. The lot size, as Perry's just said, is colossal. So
It's
the
not
figure,
realistic,
but the only
but
number you remember is £32,000 of profit. Not the fact that it's only 16 pips. You know, so if you've got £2,000 a point on, course you're going to make big money, but you need a big account to do it. And unfortunately, we don't. The average size account in the UK is under £5,000. So a £5,000 account will generate 50 to 100 quid a day, you know, and that's on the upper end, pushing it. But if you aimed at 20 quid a day, £100 a week, that's doable. And if you're doing it around a day job, I think £100 a week consistently will probably pay your family holiday. And then as your account grows, you might be able to drop a day off your work schedule. Maybe go part-time, because you might be doing maybe £150 a day. And what you're doing is you've bought freedom. And then eventually over the years, you could drop 2 days, 3 days, 4 days, and then make it your career. But it's not going to happen overnight. But people think it's going to happen in 30 days. That's one of the things I see that quite a bit on YouTube as well. Quit your job in 30 days. Really? To do a professional 6-figure salary, you really think you're going to learn that off a 15-minute video? You're in fucking cuckoo land. You know, it's a professional job. So treat it as one. And that starts and ends with planning. Sermon according to Scruff. That shut you up, didn't it? All right, fuck it. Gamble.
But it's like what you say, it comes down to the, it sounds great putting £100 on, getting 10 pips and fucking off. £1,000, 3 days a week, 3 grand, 12 grand a month. Sounds brilliant, doesn't it? It's what if that first trade loses?
Exactly right.
It's 1,000 quid. What if the next trade loses? It's 2,000 quid. And that's the problem with the whole industry is I know a guy who puts 30 to 50 quid on and he does really well. He's been doing it 9 years. He only goes for 5 or 6 pips, but he's a mechanical trade and I don't like that. So, but he's got the count. He's got the count to cover it, you know. And he doesn't brag. He's doing 30 to 50 pound. He likes to. He's got the mindset that I like. That he wants to be in and he wants to be out and he fucks off. That's it.
Yeah, that's me. I want to do as little as possible. I like my homework before I go to market is normally longer than what the trade is, or it can be longer than what the trade is. Sometimes you get caught in a trade and you're in it for 3 or 4 hours. But I look at the news, I've a weekend, I've marked all my charts out, I know what I'm doing, and then I systematically work my way through.
Oh, somebody's at the door, guys.
No, cool. But I systematically work my way through it. And then the last part of the puzzle is click. And then I've just got to wait, twiddle my thumbs, a bit of a sing-song to Meatloaf. Put my targets in place. I know roughly what I want. And as soon as I see the figure, I take it, and then I'm done. So hopefully that might spark your interest today. Yes?
Yeah, certainly has me.
Yeah.
I'm woefully underperforming, but I feel as I'm learning a bit every day, so I don't really worry about that. You know,
it's like everything else. I mean, if you sent me into a forest, you know, to sort of murder moles like what you do, you know, the first thing I'd do is pull a shotgun and try and shoot the thing, or and I'll make a right mess of it. You know, whereas you'll go, you put an ethical trap in there, Scruff, and you don't kill the rest of the wildlife. You just get rid of them and hang them on the fence so you get paid. But that's because you know what you're doing and I don't. I would just be a murderous sod with a bloody machine gun or something. It's like Fossil. You know, if I got into a plane, I know he's crashed every single one of them, but I'll guarantee I'll crash it if I've never been in one before.
Yeah.
Just so that you know, Joe, Fossil is an ex-pilot who taught the Wright brothers how to fly, and when we saw the first image, it fell off the cliff and crashed. Isn't that right, Fossil?
Yep.
We pick on him a lot. Right.
Well, I was mentoring Otto Lilienthal and silly soul killed himself, you know. So.
Is that right? Did you give Da Vinci the idea for the mechanical man as well?
No, we discussed it.
Okay, kids. But that's something for you to think about. Now, for the markets today, what you got to remember is it's Independence Day. So the US market's shut, so all the markets will be relatively dead. We've also got UK elections today, so everything will be bated breath. If it's moving, it won't be particularly violent. Tomorrow, obviously, is Friday, so it's a terrible day to trade. Could have the aftermath of whatever happens today. We think it's a foregone conclusion, but as with most things in life, it's not over till the fat lady sings. So we'll see what the exit polls are later on tonight and see what the world has to wake up to tomorrow.
Is it looking like a new government over there?
Well, it's pretty much on the cards that
looking like
Labour's
it.
going to have a landslide victory.
Yeah. Who's in now? Libs, Conservatives.
All it is, it's just the same mindset with a different colour. They're all corrupt bastards, so, and I wouldn't trust any of them. You know, I really wouldn't. But we'll kind of see. We'll see what happens tomorrow. But it looks like it's going to be a Labour government. If you go by the polls and what's going on, will it change common man? Not really. Just be a
Bit
different
more woke about, that'll be about it.
That's it. It's just all bollocks. I couldn't give it to us. I think Easter Island's looking pretty good to emigrate to. That would suit me down. Little island in Fiji or something like that. Then again, I don't think it's come to Sunnyside. It's fucking, we're quite isolated up here. We're about 50
They couldn't
years.
be able to handle you over there.
Eh?
They wouldn't be able to. They wouldn't know what to do with you. Fiji.
Yeah, probably right. I've got a McDonald's there.
Oh yeah.
I'm
Oh,
not
that's
sure.
all right. Then I'll be fine. I'll fit right in.
Yeah.
I'll blend in with the locals then. All right, kids. Have yourselves a good one.
Thanks, Scruff.
Later.
Cheers, Scruff.
Later.
See you later.
Good
See you,
day.
mate.
Yeah.
Cheers, lads.